Zimbabwe to lead One Africa government's AfroGold currency implementation. By Taka Namibika. Supreme Africa breaking news. Tisu Vanhu Vacho. The architects of Africa's economic rebirth are watching. Part 1. AfroGold, the future of African sovereignty begins. The African Union is no longer just talking, it's building. And nothing represents the One Africa government's rise more clearly than the quiet but powerful emergence of AfroGold.
Imagine a country, once basically synonymous with financial meltdown, now potentially leading an entire continent's economic revolution.
It's quite the turnaround story.
It really is. And that's the story we're diving into today, one that genuinely flips conventional economic wisdom, right on its head. This deep dive is all about AfroGold. That's this proposed digital gold-backed currency aiming to, utterly transform Africa's financial landscape. Our mission, we're going to unpack why, in a truly unexpected move, the African Union has reportedly chosen Zimbabwe, a nation with, let's face it, a turbulent past of currency collapses and hyperinflation, to lead the initial phase of AfroGold's implementation.
Right. The very place people might least expect.
Exactly. We'll explore the surprising revelations from a recent AU financial summit, analyze the unexpected success of Zimbabwe's own ZiG currency, and examine the profound implications this could have for Africa's economic sovereignty and, frankly, global finance. So let's start with AfroGold itself. It's envisioned as a digital gold-backed currency, set to unite Africa's financial systems under one secure framework.
A huge undertaking.
Huge. Its core goals are incredibly ambitious. Protect Africa from global inflation shocks, drastically reduce dependence on currencies like the dollar and euro, facilitate truly free intra-African trade.
Which is key for the AfCFTA, the free trade area.
Absolutely. And perhaps most importantly, anchor the African economy firmly in its own natural resources, especially gold. But here's the real head-scratcher. The African Union has reportedly tasked Zimbabwe with leading its initial implementation.
Yeah.
What was the actual turning point in that AU discussion? What convinced them that Zimbabwe's recent experience was the right model to learn from?
Well, that's where the story really unfolds. Earlier this week, there was this high-level, closed-door economic summit in Lusaka, Zambia.
Right.
It gathered over 42 African financial experts. You had central bank deputies, fintech CEOs, economists, digital currency professors, a real mix.
Serious players.
Definitely. Their express goal was to draft the technical roadmap for AfroGold. And it was in this very forum that Zimbabwe, against all historical expectations, emerged as the surprising frontrunner for the pilot phase.
So what happened? Did someone just bring up Zimbabwe, or?
The discussion genuinely shifted when delegates began to scrutinize Zimbabwe's own recently introduced currency, the ZiG.
And that's what's truly fascinating. Zimbabwe, a land that for so long has been a byword for currency failures, suddenly holding the blueprint for a continental currency. Tell us more about the ZiG. What made it different from, all the previous attempts?
Okay, so the ZiG currency was introduced by the Reserve Bank of Zimbabwe, the RBZ, earlier in 2024. This came after decades of economic trauma, failed monetary experiments, you name it.
We remember the headlines.
Right. But crucially, unlike its infamous predecessors, the Zim dollar, the unstable bond notes, the ZiG was backed by actual physical gold reserves held by the RBZ.
Actual gold.
Actual gold, and even other strategic assets like lithium and diamonds. This fundamental difference meant it wasn't just paper, it had tangible value backing it.
Okay, so that's the core difference.
Yeah.
And it was those specific features of the ZiG that really drew praise from the AU delegates then. What were the standout elements they highlighted?
They observed a strict monetary discipline. Now, that's a big change for Zimbabwe. They noted the government's commitment to not printing ZiG recklessly.
Which they demonstrably hadn't done, at least initially.
Exactly. Each unit issued truly had physical gold backing, verifiable backing. That was a huge shift. And perhaps most surprisingly, after its launch, it remained relatively stable for months.
Stable in Zimbabwe, that's news in itself.
It is, even as other local currencies in the region face volatility. Now, it certainly wasn't presented as a perfect solution, but inflation under the ZiG showed, let's say, historical improvement compared to Zimbabwe's hyperinflationary past.
Right. So the delegates saw it as a lesson-packed model, I think was the phrase used, rather than a perfect one. What specific insights did they pull from Zig's journey?
Precisely. One Kenyan central bank official was reportedly quoted saying something like, "We mocked Zig before understanding it, but if you study how the RBZ has managed its supply versus reserves and compare that with AfroGold's core goals, the alignment is surprising."
Wow.
They recognized that Zig's successes, limited as they might be, stemmed from a few critical actions. A major public confidence campaign run by the Ministry of Finance.
Okay, getting public buy-in.
Crucial.
Yeah.
A ban on foreign pricing in certain sectors to try and stabilize local demand, make people use the ZIG, and a transparent weekly reserve reporting system.
Transparency, that's key too.
Absolutely. These all helped build crucial, albeit fragile, trust locally.
But no journey is without its bumps, right? What didn't work for Zig? And what were the crucial lessons AfroGold aims to learn from those mistakes?
Yeah, that's where the take the good, leave the bad mantra apparently came in during the discussions.
Makes sense.
What didn't work so well, limited digital accessibility was a big one. An over-reliance on local trust versus the need for broader regional integration. It didn't easily connect beyond borders.
Right.
Delayed public education on its mechanisms, which caused confusion. And consistently low trust from diaspora markets.
Right.
People sending money home were wary.
So big hurdles. And these are critical areas AfroGold must directly address and, rectify to achieve continent-wide success.
Exactly. They know they can't repeat those specific failures on a continental scale.
So how will Zimbabwe practically contribute to the AfroGold pilot framework, given these lessons? They're not just offering advice, are they? It's more hands-on.
Oh, not at all. It's very hands-on. Zimbabwe is going to host the first AfroGold test platform. They'll be utilizing their existing central banking infrastructure and, importantly, their gold auditing systems as a kind of foundational skeleton.
Okay, leveraging what they've already built and learned.
Precisely. It leverages their newfound expertise and the existing physical setup they had to put in place for ZIG.
That makes sense. So what specific pilot activities will Zimbabwe facilitate? What does hosting the test platform actually mean in practice?
Okay, so they'll be doing several things. Simulating real-time gold reserve matching algorithms, basically stress testing how the currency supply algorithmically corresponds to the verified gold backing moment by moment.
Right, keeping that link tight.
Very tight. They'll conduct cross-border transaction testing with key neighbors like Zambia, Mozambique, and South Africa to ensure seamless flow. That's vital.
Testing the plumbing.
Exactly. There will also be merchant testing for Pan-African pricing using something called AfroGold pegging tools.
Pegging tools. How do those work?
They're basically mechanisms designed to link the value of local goods and services directly to AfroGold. The idea is to stabilize cross-border transactions and reduce currency risk for businesses trading between countries.
Interesting. What else?
Beyond that, they're developing digital wallets and mobile integration platforms specifically designed for rural African usage, thinking about accessibility from the start.
So financial inclusion is baked in.
That's the aim. And deploying AI monitoring tools to detect currency abuse and potential panic trends early on, learning from past volatility.
Right. It's important to clarify, though, Zimbabwe won't control AfroGold, will they? They're just helping test its economic engine.
That's the crucial distinction. They are the test bed, not the driver. As one AU fintech strategist apparently put it, quite pointedly, they've already learned what not to do. Now they're finally doing something right.
Huh. Quite a statement. It seems like Zig and AfroGold share more than just gold backing then. There's this deeper philosophical connection, isn't there? Can you elaborate on that shared mission?
Absolutely. There's a profound philosophical DNA here. Both, in their own way, seem to share this mission to sort of end currency colonization.
Strong words.
They are. But if you compare their features, Zig's backing includes physical gold, yes, but also lithium, diamonds, a basket of Zimbabwean resources. AfroGold will primarily be backed by gold, but crucially, gold pooled from all participating member states, leveraging Africa's collective mineral wealth.
So broader backing.
Much broader. Then format. ZIG is physical and semi-digital. AfroGold aims to be fully digital and mobile accessible from day one for truly modern financial inclusion.
Scope is obvious, national versus continental.
Right. And oversight. ZIG is the Reserve Bank of Zimbabwe. AfroGold envisions a proposed AU Central Monetary Council emphasizing Pan-African governance, not single-nation control.
And inflation strategy.
Similar principles, different tech maybe. ZIG used print limits enforced via those physical gold audits. AfroGold plans to use algorithmic issuance caps, meaning new currency units are automatically limited by pre-programmed rules tied directly to the verified, audited gold reserves. It aims for a rigid, transparent, and automated supply control mechanism, plus regular independent reserve audits.
So building trust through technology and transparency.
That seems to be the core idea. And AU leaders apparently believe that if ZIG can show even signs of success in a historically volatile place like Zimbabwe, then AfroGold, with stronger backing and tech, could genuinely thrive across the continent.
It's a fascinating logic.
And what's more, Zimbabwe's small-scale rural testing of actual gold coin retail trading was apparently referenced in Lusaka. It sparked ideas that maybe one day AfroGold could allow for micro-gold token purchases, directly linking everyday citizens, even in remote areas, to the currency's underlying asset in a tangible way.
Wow, connecting Main Street to the gold vaults, almost literally.
Something like that. It's a powerful vision.
Okay, so beyond just a medium of exchange, the vision for AfroGold seems to stretch much, much further. It's not just about money, is it? What's the broader, more ambitious goal here?
Well, this is where it gets really interesting. What's truly fascinating is the sheer ambition. AfroGold is being framed by some proponents as, and this is a quote often floated, the economic bloodline of the One Africa government.
It's a profound statement.
It is. This currency represents, for them, freedom from IMF loan traps.
How so?
By providing a stable, internally backed store of value and medium of exchange, the idea is that African nations could significantly reduce their reliance on external, often condition-laden borrowing.
Okay.
It's also about breaking free from foreign reserve dependency, needing huge stockpiles of dollars or euros, and escaping the historical currency manipulation or perceived manipulation by former colonial powers.
Right. Anchoring economic power internally.
Exactly. Anchoring Africa's economic power in its own abundant resources, specifically gold.
So this means AfroGold will be backed by Africa's own wealth, not foreign debt. It will empower borderless African trade, provide a shared economic identity, maybe foster a sense of unity, and link AU nations through one secure transaction chain. It sounds like a declaration of economic independence.
It really does. And if we connect this to the bigger picture, the vision extends even further. Some discussions suggest AfroGold might eventually integrate things like carbon credits, green energy tokens from African projects, perhaps even regional market scores.
Multi-layered.
Positioning it as a multi-layered tool of African economic power. It's a holistic approach to wealth, potentially going beyond just minerals, integrating sustainability and collaborative economic growth metrics.
So potentially a civilization-defining instrument, as someone put it. That's quite the claim.
It is. Much like, perhaps, Bretton Woods or the rise of digital currencies reshaped global finance, it's not just about transactions, it's about defining a new economic future for the continent on its own terms.
This sounds incredibly ambitious and, frankly, quite positive in its aims. But surely there have got to be significant hurdles. What are the biggest political or economic challenges AfroGold will face in gaining full adoption across such a diverse continent, even with AU backing?
Oh, absolutely. You're right to point that out. The challenges are immense. Trust is probably number one. Building trust not just between governments, but among citizens and businesses across 50-plus nations.
After decades of various currency issues in different places.
Exactly. Then there's the integration challenge. You have diverse financial regulations, different levels of technological readiness, existing currency arrangements. Harmonizing all that is a massive political and technical task.
And the scale itself.
The sheer scale of the rollout. Plus, remember the ZIG's weakness with diaspora markets? That low trust.
Right. Remittances are huge for many African economies.
Absolutely vital. AfroGold has to win the trust of Africans living abroad. That means robust, transparent digital platforms, clear education, maybe guarantees. The AU is aware this isn't a simple flip of a switch. It requires sustained political will, buy-in from every member state, navigating regulatory differences, and maybe even overcoming some nationalistic resistance to a single continental currency.
That's a long road ahead then.
Yeah.
So with such an ambitious plan and these inherent challenges, how are people reacting on the ground in Zimbabwe, regionally and globally?
Well, in Zimbabwe itself, public opinion is certainly mixed, but leaning hopeful, perhaps surprisingly so. Some citizens feel a strong sense of pride. You hear things like, "We've been mocked for years, now they want to learn from us."
A sense of vindication, maybe.
Perhaps. Others, though, still reeling from past currency failures, remain a bit skeptical. They point out, ZIG is not perfect, prices still rise, so caution is definitely there. But entrepreneurs and professors, especially those involved in the early ZIG frameworks, they feel genuinely excited and validated by this AU recognition.
Yeah. Okay, a mix. And reactions from other African states. You mentioned constructive.
Incredibly constructive, actually, which really speaks to the potential unity of purpose here. Kenya, for instance, immediately offered practical help. Digital wallet infrastructure support, cybersecurity training.
Real contribution.
Yes. Ghana volunteered one of its established fintech labs to specifically test AfroGold to fiat currency exchange mechanisms, how it connects to existing money.
Rational stuff.
South Africa, being a regional economic powerhouse, took a pragmatic stance, insisting AfroGold must work with, not against, existing financial regulations, finding harmony. Nigeria, often cautious, sent observers and is reportedly considering adoption trials, perhaps starting in Lagos. And even smaller nations like Eswatini and Lesotho offered to trial AfroGold in their informal markets, showing interest right down to the grassroots level.
That's significant buy-in across the board.
It seems so. The AU chairperson, John Lorenzo, was quoted saying, "This is the beginning of financial unity, not just as policy, but as practice." It feels like a genuine narrative shift is underway.
And the global view. How are international institutions and other major world powers viewing this potentially disruptive African initiative?
The global view is equally intriguing, maybe a mix of fascination and apprehension. Institutions like the World Bank, the IMF, even Bloomberg analysts, they're now reviewing the ZIG model with a fresh, perhaps more serious perspective.
Taking it seriously now.
It appears so. There was reportedly a leaked memo from a U.S. financial research group. Can't verify it fully, but the report said it stated, and I'm quoting loosely here, "If AfroGold succeeds, it could challenge dollar dominance in African trade by 2030 and 2035.
Wow. That's a significant projection if true.
It is. China has expressed keen interest in supporting AfroGold's tech infrastructure. While, clearly keeping a close eye on Zimbabwe's lithium reserves and other resources involved. Germany reportedly offered the AU technical support for fiscal AI governance, focusing on stability, transparency tools. And France even requested an observer role in the process.
So everyone wants a seat at the table, or at least eyes on it.
Pretty much. Zimbabwe, once an economic pariah, ignored on the global stage, is now genuinely a chess piece in a new global financial order, as one analyst put it.
That's a powerful transformation. Thinking ahead then, painting a picture.
Yeah.
What could AfroGold realistically look like in practice? Say by the year 2030. What kind of tangible impact could you and I, or someone living or trading Africa, actually see?
Okay, by 2030, if the roadmap holds, you could see AfroGold being as ubiquitous, perhaps, as local currency in many places, accepted across AU shops, hotels, airports, border posts.
Seamlessly.
That's the goal. Imagine a small vendor in Accra accepting AfroGold directly from a tourist visiting from Nairobi, or a student in Dakar paying tuition to a university in Cape Town using seamless AfroGold transactions.
Reducing friction and costs.
Exactly. It could be used to pay continental tolls, maybe regional school fees, trade levies under the free trade agreement, creating a truly integrated economic zone. It fundamentally reduces the friction and cost of doing business across borders.
And its structure would be robust, you mentioned, backed by smart contracts preventing overissuance.
Right, those automated caps. Audited monthly, they say, by an independent Pan-African Reserve Council crucial for trust. Protected by strong blockchain encryption, and crucially, built in Africa for Africa.
That built in Africa point feels important. And how might this impact the average African citizen beyond just commerce? You touched on remittances.
Yes, that's potentially huge. African migrants working abroad might one day be able to send remittances home in AfroGold. This could bypass expensive conversion fees charged by traditional services and, as a side effect, directly strengthen the collective AU Treasury reserves backing the currency.
So it's not just about financial efficiency. It's about empowering citizens and consolidating continental wealth within Africa itself.
That's the fundamental shift it represents. It's foundational.
Zimbabwe's journey here, from being the ultimate cautionary tale to now serving as a reference point for rebirth for this continental project, It's truly incredible. It feels like more than just economics. It's a profound narrative shift for the entire continent.
Indeed it is. AfroGold, born, as proponents say, from Africa's own soil and its struggles, is framed as the currency the continent owes itself. But its success? Well, that depends entirely on clear leadership, unwavering transparency, consistent continental unity,
And learning the lessons.
and learning from every single past scar and failure, including Zig's own shortcomings. The potential is there, the gold is real, they emphasize, and for many, the moment feels like it is now.
So, reflecting on all this, what does this ambitious African initiative truly mean for the wider global financial landscape? And maybe more importantly, how might this project, if it gains traction, inspire similar shifts in other regions facing their own currency challenges or seeking greater economic autonomy from dominant global powers? What ripples might this create?